How important is this earnings season, not just in the United States, but globally?
Good morning, Brian. And yes, I think it's likely to be a very important week for the short-term outlook for markets. But I think it's really important as investors to take a bit of a step back and look at the longer-term outlook. We're long-term valuation-driven investors at Morningstar, and so we try to look through the short-term announcements and really look at the overall opportunity set for investors. And so while this week, obviously, shorter-term investors, traders, market participants will be looking for reassurance because we've seen a really strong rally in equity prices over the last few months. As longer-term investors, we see a pretty unattractive opportunity set. And so unless there's some really strong surprises in earnings that might cause us to change our longer-term view, then actually the outlook we see for investors is not as good as it usually is right now.
Okay, not as good as it usually is, unattractive. Those are not exactly the most bullish words that we have ever heard, Dan. But does that mean you are negative on equities or simply not optimistic, that maybe the year's gains have already been made for most of the developed markets?
Well, we should never be too confident about predicting where prices will go next. But certainly, we were more optimistic about prices at the beginning of the year than we are now. We've seen a very sharp rise, as you were saying. And so as we look forward, most equity markets that we see look to be either a little bit above their fair value, or in the case of US equities, a long way above their fair value. And then really, unless there's something to change that fair value, then we'd expect low returns going forward. So like most valuation-driven investors, we tend to be most optimistic when others are negative. We like prices that are low because that gives us better opportunities to buy.
So do we stay on the sidelines and simply wait for things to fall? Do you think things will fall?
Well, I think in terms of some markets, then they could continue to tread water. If we look at some of the more attractive markets like the UK equity market that you mentioned, despite Brexit, equally Japanese equities, they look to be trading near fair value. So you'll get near a normal return, we think, out of those markets over the long term. But when it comes to US equities, and particularly some of the more favoured parts of the US equity market, so for example, technology, consumer discretionary, to us, they look fundamentally overvalued. And so we'd have far less in those sectors than we would normally have, far less in the US equity market, in fact, than we would normally have.
Okay, a viewer listens to you, Dan, smart insight, and says, I'm gonna listen to Dan Kemp. I'm gonna sell technology. I'm gonna raise some cash. What do they buy? What looks inexpensive and a good value to you?
Well, and that is the toughest question. And for that reason, we're holding a bit more cash than we would normally in portfolios at the moment. As you know, typically when equities look unattractive, people normally tilt their portfolio more towards bonds. But what we see at the moment is that bond markets also look fairly unattractive. And particularly if we look at the US yield curve, then you're not really getting paid to take any longer duration risk because the yield curve is so flat. And so in that sort of circumstance, we're tending to hold more cash. But again, I think it's important not to be too pessimistic, although the US market does look particularly expensive to us. As I said, UK equities, Japanese equities, and some of the individual sectors look attractive, but also it's worth remembering that nobody should be overconfident in their prediction. Just because markets look unattractive now doesn't mean that they won't look even more unattractive in a few months' time. So, as ever, don't be too precipitative in your movements. It's not all or nothing. It's about just appreciating that on average returns are less attractive than they normally are, and then maybe taking a little bit less risk than you normally would.